Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me.
Yo, good morning, everybody. Look at this nonsense. Freaking smashed my fingers in a door yesterday. Broke my shit. Oh, gosh. I wasn't sure if I could do the call today, but I figured it out. But yeah, so with that being said, let me try to get everything in order. So I might be a little bit slow because I gotta kind of be cautious with my fingers. It's the tips of my middle finger and my ring finger completely shattered, which is fantastic. But, you know, that's why trading's amazing, right? Doesn't matter. If you could figure out a way to do it, you can make it happen. But yeah, if I'm not making excuses, no one else has excuses. Oh, I don't want to get up. Oh, I don't want to do this or that. Suck it up and get to work. Okay. There's things to do, a future to build. And the world doesn't care about your excuses. And excuses sound good to the people that make them, nobody else. Right? So don't make excuses. I appreciate you, Tony. Excuse me. So just bear with me for a little bit. Trying to get this up. Oh, so irritating. It's hard to click. All right, so what we're doing now, it's February now. So we're gonna keep tabs of the open price. Right. So this is an old new week opening gap. So these are just some things that you want to prep with. What the hell just happened? Get your new week opening gaps. And again, you want that open price. Because just like last month, see accumulation, manipulation, right? Or manipulation lower, and then distribution. But we came pretty close to the open from last month. So that candle turned out to be a bullish candle, but kind of a tight candle. It just ran out the previous month's high, which was there. These equal highs. So yeah, so we're coming off of this may also be a rejection block. It looks like it's treating it as such. So we got a rejection block up here. We got a wick 50% level. It couldn't even make it. It couldn't even make it to this one either. And we're kind of trapped inside of this whole candle's range from November. It's just been kind of sideways. If we take a look at DXY, we have a liquidity void right here. What is that? Right? It's just a gap where there's no trading whatsoever. Right? We did talk about how this could get reached into. Saw this big, see this big wick down below this low. So with that being the case, and we came up so aggressively, that makes you hesitant to push for shorts right away because it's clearly looking to come back and seek some stuff. If we go to the 4 hour. So yeah, just like how this little liquidity void here is present, it's the same thing with this little gap in here that was below this low and then right above this little high here. I talked about that. If you go back to some of the videos last week, I pointed that out. Well, Tuesday, right? I talked about this daily in my private group. Right, it's one of the benefits of being in that group. We're talking every day. I did point it out in the free community as well in a form of a markup. So we can see that we've traded through that. We have an inversion here for the DXY. And again, it came off of the 2025 low. So a yearly low, swept the yearly low, and now we've returned back into the range from this high to that low. So I don't really want to see, if we're going to continue to see this push lower, I don't want to see us get too deeply in. I mean, we do have up to this point. There's a low there, open candle, and then we got the void. So there is inefficiency in there. I'm more so focused on how this is going to be treated, at least for the start of the month. We are below a quarterly fair value gap too. So if we take the DXY to the quarterly perspective, we see that that's this fair value gap. We got these up candles in here. It's a 6-month bullish or bearish order block. We have this low, high, lower low. So we've been using this whole idea to keep price going lower. But we'll see, right? We'll see if it wants to take out some of this, but I'm not going to be, putting a lot of stock behind that. I want to see if this can continue to go lower. If the indices continue to go lower, though, we may see this rebound, unless they all just want to go lower together, which has been the case for quite a while. So we will see if it does look to want to continue to go lower. It's a little itty bitty fair value gap in there, but it's also a quarterly low. surprised I can click and it doesn't hurt. So yeah, we got that quarterly low there. We got 2 of them. I think this next candle that comes out, well, we're still in the same quarter, so never mind. So we're still in this candle. This is the current quarter from December 15th last year to now. And again, we've gotten down below. We did sweep out liquidity here. So this high, I don't want to see that taken out, honestly. This is a fractal high. We got a higher high in the middle, lower high to the left, lower high to the right, inside of a fair value gap. It's also below this breaker, which is also an order block. This whole upper portion needs to be left intact if we're going to keep pushing this lower, right? And this is from a quarterly perspective, so that's long term. That's like for the next, month or so, maybe even further. This is all balanced in here. Same with this, up, down, right? All that's balanced. So if we could stay below this quarterly fair value gap, I think we're still good to try to seek price continuing to go lower. Good morning, Chawezi. Good morning, everybody. So yeah, we'll see. If we could stay below this, I still think that we can continue to go lower. Like I said, we have this little gap in here. I wouldn't be surprised if we open up, come and try to clean some of that up. And then maybe get a rejection from that. This is a order block here on the daily chart. Right there. So if we do trade beyond that, how we're going to gauge if this is going to continue to want to go higher, maybe set this up as a buy model, we have to watch this change in state of delivery here, right? Closing above this like it has, puts us in position to, here, let me remove this too. This puts us in position to watch the 50% here. If it starts to trade down into it, if it can't even get to that, say it creates another order block and then breaks that order block again, bullish, then we'll have to look at that as a potential double change in state of delivery, and we may look to explore a little bit further up into the buy side. Given the quarterly perspective, it is still range bound, right? Or even just the monthly perspective, it's still range bound. Same with the quarterly perspective, it's kind of sideways. And now we're pulling back inside that little range of consolidation, right? So it's just sideways. On that monthly chart, you saw the same. Quarterly chart, you see the same. It looks like it has a favor to go lower, though, right? So it's a little bit more interested. We'll see, though, because we just took this low here. It may look to recover, and seasonality is somewhat bearish for the start of the year. There's little spurts of bullishness for the indices, but here, let's actually pull that up because it is the first of the month. So yeah, February is a little bit bullish. So if we come in, it's the 10-year. Okay, so the bonds have somewhat of a bullish interest. Okay, there it is. February, you could see all 3 of these lines. Oops. February, you could see all 3 of these lines. Right, moving higher. And then towards the mid-February, there's a high that forms across all 3 of these time intervals, 5, 15, basically 30 year. So for the NASDAQ, it's to start the month, it may start to be bullish. If that is the case, we want to see this over here, the DXY, we want to see that respect this. That kind of goes hand in hand with this. So if we could see that, we could be pretty confident that seasonality is actually going to potentially push us up a little bit, and then we'll kind of see how that wants to unravel. Take a glance real quick. Yeah, we all know that there's been a huge decline, so we'll see. But yeah, you want to keep this in mind. You want to keep seasonality in mind always. Yeah, there's somewhat of a bullish seasonal influence for gold too, to be bullish, and then a little bit bearish. If we come back over here to the 10-year T-note, right, which is the bond market, someone has a bearish tone, right, going into February. A little bit bullish to start, but yeah, it's got that little bullishness to begin. So yeah, seasonality is not a be-all end-all, but it is something to use, right? You want to use it as a underpinning, repetitive thing that happens. So if there's like a bullish interest or a bearish interest at some time of the year, especially at the beginning of a month, which is when you want to look at seasonality always, and the beginning of a quarter, it can give you like a rough idea of what generally occurs. And then if something in the chart agrees with that, then you're inside of a seasonal influence. And when you're in line with the seasonal influence, you could be correct. Since we look at things from the higher time frame, you can be pretty solidly correct for a long period of time, more than a day, right? More than just one session, right? They're not as impactful on a day-to-day basis, but on a grand scheme of things type of basis, if you can nail this down, I'm telling you, it's just one of those things. People say it's not useful. People say this, say that, but those are the same people that are stuck on the 5-second chart every moment of every day, blowing accounts, doing a bunch of stupid things. While we're over here now on a year-to-year basis, week to week, month to month, day to day, even session to session basis, able to call bias and narrative in a more long-term capacity, but then also navigate those retracement times as well, and still hang on to the bias and narrative overall without flip-flopping. Part of that has to do with the power of seasonal influences, right? So again, we got the dollar tagging out this low. That's one thing I didn't pull up. Let me go find the US dollar. See, the dollar has somewhat of a interest to push a little bit. You can already start to see how there's a correlation there, right? So yeah, this right here shows you what I was just talking about, how there's a correlation that happens. This is the study that people don't do, right? They don't go in there and they don't look for this stuff. They just see it, they look at it, looks like it's not in alignment yet, which seasonality is a higher time frame thing, right? It's not a every second of every day. But when you see things agreeing like this, that's amazing, because then you can have another layer of trust, right? It's another thing that you can use to build trust in your narrative and your ability to call the market wherever direction it's going to go. And then be confident it's going to hold and you don't flip-flop, right? But yeah, don't forget to like the video, subscribe to the channel if you guys get value. It's much appreciated. What we do here is not done, especially in my private group. None of this stuff is really shown. There's a lot of things, obviously, because I'm a purist with ICT, but there's a lot of things that people just don't know, and they don't use, that we use, so, and it works. You guys see it. So if you enjoy being correct most of the time, if you enjoy learning how to get over losses and how to manage them properly, how to call bias and narrative, how to gain clarity in your trading, then this is a home for you. And you can support the channel by liking the video, right, and subscribing. So yeah, with all this stuff being said, if we take this high to that low, we got equilibrium. So we're pulling back to equilibrium. There's a bullish seasonal influence, at least early on in February for DXY. Looks like that's unfolding. While this is unfolding, you can see the impact that it's having with the other assets. So we'll see if that's short-lived. Maybe it is, right? Maybe this continues to rally. But there's been a lot of liquidation that's happened. Gold, silver, everybody thinks the world's on fire because they just sold off. It's part of the game, right? It's parabolic bullish move. Nothing that continues to go higher is going to keep going higher. It'll eventually turn around because it's got to liquidate people. They're going to come back and sweep up liquidity, right? But we'll get to gold in a little bit. Yeah, so we got the yields looking like they want to hold this, pushing higher a little bit. That's had at least in my opinion, that's had a pretty solid impact on the dollar's ability to stay above that low that it ran through. So we'll see if this continues. If this does continue, we still have our invalidation down here, right? I've had that there for a while. We're in a range. When the bonds and yields are in a range, that can lead to problematic price delivery in the other assets because the bonds and yields are highly influential. Those of you that have been with me for a while understand this. And when it's like this, again, it's a sign to manage risk a little bit differently. All right. So we're going to start this month. It is the start of better months to trade. There's a lot going on in the world. So I'm going to still keep my risk minimal. I'm not going to trade more than 1%. Generally, I'm anywhere from 1% to 2.5%. But when it's times like this, I'll go as low as 0.5% per trade, right? Like I won't be too aggressive, especially in funded accounts. It's just why do it? Just get more accounts, get more than one, and then just go slow. There's no real reason for you to do too much until it clears up. Then if you want to be more aggressive, that's up to you. I'm not here to tell you what to risk, what not to risk. I'm not a financial advisor, and this ain't financial advice. But we have a lot of crazy things happening. We're in harder to trade times, right? So risk is highly elevated. Imagine if you were on the wrong side of this gold and silver trade because you just refused to take profit for whatever reason. You need to get the 1,000 points. You need to catch every move. You need to catch the whole move, right? Just imagine. People got crushed. Firms go under because of this. People quit trading because of things like this, because they get too overzealous, right? So just manage your risk properly, right? And we're going to keep calling the market. It's going to keep doing what we say it's going to do. And this was just a black swan event. That's the risk you're involved in. This can happen to any asset, not just this, right? It happens in crypto. It happens in indices. It happens in currencies. But that's the game we're playing, right? You got to risk it for the biscuit at times, but there's a safe way to risk in this industry. Okay, so we do have these things that I just showed you on this chart. Large wick, displacement, overlap of this fair value gap. Now we got this fair value gap, which is on the weekly chart. 3-day chart. So it's got trading through that. So I personally would need to see this get above it and go higher, right? With gold, right? Silver too. But this is something that you don't want to touch at the moment. You don't want to touch it, right? And if the bonds start to decline, that's going to be promoting continued downside in both the indices and this, especially if the yields continue to rally. That's a beautiful correlation. And then we should start to see dollar kind of recover off this low. Remember what I said, if there's a big wick that happens after a higher time frame levels met like this, and we return back into the range aggressively like this is aggressive, back into the range. So that just looks like this was a stop raid, right? They're just like liquidating people below those lows. Who knows, right? Maybe the dollar ends up being bullish. Maybe it starts to recover because a lot of this decline has been artificial. So trade can be kept reasonable for exports from America. It was part of Trump's plan. He wants to favor the exporting from this country, and lower dollar equals lower import costs. His Treasury Secretary talked about this at the beginning of the year. Well, last year they talked about this. They're saying the same thing now. Trump has even said, he's like, I could push it higher or I could push it lower. The lower it is, the cheaper things are for exports. So it's been, he didn't come out and bold-faced say that they are manipulating it, but it seems like that's what's happening on the back end. And they're saying it too. You know, you listen to what they say, but look at what they do, right? And what's happening correlates with what they're saying. So lower dollar inflates other things. It keeps the stock market going higher. It's good for a president because it's a way that normal people gauge the economy aside from inflation. Inflation is the real gauge, whether something's doing well. That's also being tamed. So there's good things happening. So I wouldn't be surprised, right? If we do, get this to, start blowing past a little bit, but I don't want to see that with what we see. But we have an early sign that it may recover because this big wick here. So we got to just observe going into this next week. I almost forgot to look at this. We have a lot of news. So we got PMI, it's NFP week. It's another added reason to be cautious. I think we still have earnings. Yeah, we got a lot of earnings. So yeah, we got to keep tabs on this. This is very impactful. Around earnings, that's another time of the year when there's this many with the biggest companies on the planet. When they're doing earnings, it could be another excuse, aside from news events, aside from like the start of a month, right? NFP and FOMC. It's more of a reason for them to make things unorthodox, right? And just because someone has good earnings or a couple companies have good earnings doesn't mean there's going to be positive effect, because it could just whip against whatever the news was just to get them repositioned and then put people on the wrong side when they decide to really go in the right direction that they're intending to go. Right, so this is just another added risk, right? It's something you got to pay attention to, okay? But again, if we see the yields stay above our invalidation level, it's respecting this monthly order block, if it stays above this fair value gap, that's a good thing, and we'll continue to see price rally through to the buy side, okay? Or we'll see the DXY rally to the buy side and other stuff, especially if this follows through going lower, especially if we break this wick, that'll leave behind a BPR, and we'll have came off of this up here, right? It's a breaker. It's being respected. I said my invalidation level is above this high of the breaker, right? Then it would turn to an inversion, and then we would look to go higher, and that would be positive for the other assets, right? But again, if this continues to go lower and the yields go higher, then we'll see continued downside in the other assets, at least for a short time, and then we'll see the DXY rally, and we'll have to determine with how things play out if it's going to be long-term or not, right? So yeah, hopefully that's understood. Again, the most important liquidity is the Friday's high and low, the previous week's high and low, and then any other weekly high or low that's in close proximity any higher time frame PD array that you can spot that's in close proximity. But specifically before any of the PD arrays or anything up here or down here gets targeted, Friday's high and Friday's low is the most important. That's on every asset when you start the week. That's how you want to map the liquidity. I have a list of liquidity in the free group and in my private group. We talk about this all the time. We call it liquidity mapping. And, if you haven't been caught up to speed with that, I encourage you to go do so. It's very important, right? But again, all this stuff is the same old, same old. Hopefully it's review. Any of you guys that are new, just ask me questions, whether you watch the replay or, join a little bit later. More than happy. You could leave it in the comments too, so I can get back to you later. But yeah, hopefully all this makes sense. Do you guys have any questions? Down, leave it in the chat before we move on. So we'll kind of fly through this. If everything makes sense, you can just put a 1 in the chat. Good old matcha, man. Oh, it's so delicious. It's the best drink in the world, especially for a trader. Oh, the caffeine with no crash. Thank you. Yo, what's up, Mike? All right, everything makes sense. All right. Yeah, it's for you guys. I know it's kind of review. So yeah, we'll see if this little void can be targeted. I'm going to go off of how that's treated. And if it blows through it, right, we'll have to see this high to that low. We'll grade that price swing. And then we'll look to see possible market maker buy model. That all began from the 2025 low being swept and the wick pulling up against it. That gives us an early sign. And if we break beyond the 50% of this, that's an early sign that we may not be done going to the buy side. Then we got this up movement. We'd have to watch that whole business. And yeah, we'll go from there, right? But for now, Friday's high, Friday's low, this liquidity void, the 50% of this quarterly fair value gap, and from this low down to the gap here, well, down to this, but you could use a whole gap. This low to the end of the gap here, that's our range. We want to see price stay inside of that or below it. If it gets above it, that could be a problem, okay? Otherwise, if that does continue, we're going to continue to go lower. I'd prefer to see it. Seasonal influence obviously has an impact. So if we start blasting through this, bullish seasonal influence is kicking in. So then we'll have to pay attention to that. But for now, this huge drop, I'm curious to see how this behaves in this. We have seen things really accelerate on the indices and currencies, basically making big drops, gold and silver as well. So if that's going to continue, this needs to rally through these levels I'm talking about. If that happens, then we're in business long term, at least for the next week or so, maybe even a month to the end of the quarter, to seek further lower prices and a possible bearish power 3 accumulation manipulation phase unfolding for the year, going lower for the indices and currencies to then maybe eventually go higher if things go well this year. My matcha, I use slightly sweetened original or just like normal flavored coffee creamer. I use 2 or 3 scoops of matcha, which is like 3 cups of coffee in 1 little cup. I use this cocoa stuff that's, let me pull it up. It's this stuff right here. The best stuff ever. It's worth every dollar. It's so healthy for you. It's just really, really good for being focused. And then I also use monk fruit, and I just froth it up, right? Mix it up, and it's honestly the best thing ever. It really is. If you want to be healthy, have energy, and not have a crash, I mean, nothing beats it. I used to drink coffee every day. Coffee has its benefits, but it also has its downsides. With these things, I mean, there's really little downside except the fact that too much green tea can lower your iron in your blood. But I mean, it's not as dramatic. We're not using a lot, you know. And you can get that from other things. It doesn't really affect you too much. And the upside is absolutely ridiculous. Go look it up, right? That cocoa stuff that I just showed you, look it up. You'll see why. And it makes it taste like a chocolatey green tea. Who doesn't like that? It's delicious. And you have a little bit more of a sweetened effect with coffee creamer. If you get one that has like a little bit of sugar in it, not a lot, and you just mix it, it's just the best. It's the best thing ever, honestly. So to all of you guys that are traders, if you want to get rid of coffee, maybe it makes you jittery or crash, or it messes up your teeth, and you want to switch but have the same benefit with more benefits and be healthy, I encourage you to try this out. It's well worth it, trust me. But yeah, so that's my thoughts on DXY. So if we move over here to the currencies, we see that there is a decline in here. I called this as a low resistance liquidity run. We did get that. If you guys go back to the videos, I mapped this out, talked about it. If it stays above this, I also said that if we were to break down, right, get below this, right, like if this wasn't going to rebound and we stayed below this, you guys can remember I talked about this as our invalidation for shorts since it declined through it. Because if it was going to be bearish, it should respect that range as a balanced price range. Price ran up, or it kept going lower. It hit an order block here. This is also a 3-day fair value gap right there. Came down, swept the liquidity, then we changed state of delivery, and then we broke above this. So that was enough to send us through to the buy side. And it blew this stuff out fairly easily. That followed, it was followed by this, right? And the dollar was tanking, but now the dollar is rising a little bit. And because we took out liquidity, it's reasonable for them to give a retracement. We don't want to see them get from this high to that low. 50% of that range, if it was to get beyond that, then we're able to target down here. We do have this gap in here, right? It's a gap plus the volume imbalance here. We have the order block here. Move up to the monthly chart. We actually have an order block here. Go to the quarterly chart. We could see how prices inverted this. Right? It's pretty solidly used that. And now it's just continued. So depending on if this wick stays intact on a quarterly basis, right? If it breaks through this, we'll probably look to target some of these equal lows. More long term. Right? This wick not holding, if this was the 5-minute, these are equal highs up here, so that's my longer term target. Okay, those are equal highs here. That's absolutely perfect. So we got an order block here, order block here. Oh, we got a run on stops. Price closed above that order block, 50%. See how the body's respected perfectly. We got this inversion, fair value gap. We have this order block respected, now respected, and now we got a wick, fractal low. And we have relative equal highs up here that look pretty obvious. So I think that is the more likely target. Again, we're going to have to see what the dollar's going to do. If this is going to get up here, though, it just reinforces why I need this to hold, why I would like to see this hold, because that would beautifully support this continuing to get up there. You can kind of see how it all dovetails together. And the only way that I'll be thinking that this is not going to do that is if we start to break through all of this. We have a suspension block in here. Okay. So that's another PD array. So we'll watch that. We got a fair value gap being taken there. Let's actually just move up a little bit. That suspension block is actually a fair value gap and a volume imbalance here too. Maybe it looks to reach into that. I don't want to see us break beyond the 50% of this suspension block. If it does, that's an early signal. It's an early sign that we may be looking to start to go deeper. You know, if you go from this low to that high, you can get equilibrium somewhere around there too. Go from that low up to the high. So yeah, this little area, like I said, just with the suspension block, it should be very sensitive. We should not really have to have price get down too deeply. If it is going to keep going higher and we are going to target this larger equal high up here, it looks pretty obvious that it's going to target that up there. If you go to the weekly chart, we could see that this is operating as a potential buy model. All right, and again, if that fails, right, this is second stage distribution, or at least it's in that area right here. We don't want to see price get below that. Right, we got accumulation, reaccumulation, smart money reversal, first stage distribution. We had a fast-paced left side, so the right side, generally in a buy model or a sell model, if the other side is very fast, the right side could end up being kind of slow and just grind its way up there. Seems like that's been the case. Fast sell-off, slow, lethargic grind. Some moments it's been fast. This in itself created a buy model, which we talked about in the moment. And then we came all the way down here. We got this high, low, higher high. It's a breaker. It's clearly held that. Now we got a high, low, higher high again. So now we got another potential breaker setup. Further reinforces why this needs to hold. We did take the highs out, so it's not unreasonable for them to pull back a little bit. But if we lose this low, that's a problem. And it's going to most likely get us to target the sell side here. If we take this low, I would not be surprised, in all honesty, for them to come down and try to target this. This is a quarterly inversion fair value gap. Right? You could see how the quadrants, right? 50%, 25%, 75%, almost exactly closed right at the 75% market maker buy model. But you could see that it rallied up. So okay, so like I said, the most important liquidity, at least to open up, because the next candle that opens up for this new week, it's going to open up inside unless it gaps, right, and gets outside of this range. But it's going to open up inside this range here. Okay? So whether we're targeting down here or up here, we still need to break out of this previous week's range. That's why it's important. And then before it gets to that, we have to get through Friday's high and Friday's low, which is this candle here. Friday's low, Friday's high. Okay? So, and again, we've now triggered in a retracement. If it is going to be bullish, it may look to try one more time to unseat some people from Friday, because there's lots of liquidity below that low because it's the end of the week. So they may open up, if it's bullish, they may open up, drop lower, sweep out some of this, stay above the 25%, 50%. I don't want to see it go down to there. But if it does that and then it displaces and we get beyond this fair value gap here, you can rest assured that price is going to use it as support Once it gets through it, it'll be a balanced price range. And then we could continue to walk price up to these highs up here, which is the previous week's high. So that's kind of what I am viewing in this instance. Previous week's low is here. There's lots of liquidity there. How do you know? These gray boxes from this indicator. It's highlighting Sunday. So you can instantly see the weekly highs and lows. So weekly low is there. Okay. And so you would just do the same thing to, we do the same thing to all the other assets, right? And again, we started with seasonality. We're on the higher time frames. Hopefully everything up to this point, you could see how everything is systematic. We do the same thing every week, every day in my private group. And the longer you spend here, the more systematic it becomes. Because I don't change what's not broken. And this stuff is not broken. Even if it doesn't work, it's like at times, because maybe we get it wrong, which is very rare. But when it does happen, we're able to then adjust because we have a process for that too, to be flexible, right? Because everything has an inverted nature to it. And if one side's not working, you just think, okay, is there an argument for the other side? If there is, you just catch a continuation going the other way. You wait for your models to show up. You wait for everything to unfold. You don't freak out. You don't hurry up and take 5 trades after your first loss. You slow down the process, take a deep breath, maybe even get up off the chart and go take a 15-minute break and then come back. And then you think like, okay, well, what's happened now? You know, you can take an hour break and come back. Every last 15 minutes and first 15 minutes of every hour is a macro. So you could wait. If one macro doesn't look right and it's consolidated, you could wait, come back for the next one. And you'll get more information if you have to do that. It's a little extreme, but some people need that so they don't overtrade and over leverage and do stupid things. But again, this is what I'm looking for. So I would prefer to see us do this retracement. If DXY is going to hit this and retrace, or just retrace to then go lower, simply to fill in the rest of this void in here. Why is it a void? There's not even a wick in that area. So, you know, getting up above this too, right? We got to watch. If it just blasts through this, this will be a change in state. And then once it gets deeper, we'll be able to look at this as a buy model. And then that'll be supportive of this continuing, especially if that happens. And then we see this start to break down below our invalidation here, right? The midpoint of this. Or early signs of invalidation to the buy side, right, by breaking this, then we'll be able to adjust and then see this as a sell model instead of seeing a retracement that's going to target the buy side as a buy model, right? If that was to fail and we break down below here and DXY was to accelerate to the buy side, we got a buy model here and then we look at a sell model. But for now, I'm looking at this run higher. It's possibly setting this up to just take the stops, balance out the price range here, clear the void, and then set us up with a sell model going to the downside. And then we could use that framework throughout the rest of the week next week if it all stays intact. But again, we have our contingency plan. I prefer to see that happen, right? Price go lower. And then we could see this retrace and then go higher. It's already started a retracement, so it may not want to retrace too aggressively. If the intention is to be bullish, it is the start of the month, right? It's the start of a new week. So we got to consider power 3, okay? So it's going to be very important to see how today and tomorrow unfolds, right? We'll see how the beginning stages of the week begin, and then we'll make a full determination. But for now, I'm assuming that this is potentially going to dig into this a little bit, but then eventually we're going to get up above this. It's an inversion bullish or a reclaimed fair value gap going bullish. And then we could look at a buy model framework for the larger view, right? For this retracement lower to possibly go higher. And then anything on the lower time frame that we operate with, it's going to be used from that context. And because it's the higher time frame, this doesn't change, rapidly unless something changes, like this gets broken through. In that case, we may look to target this low, and we'll be in the opposing view. But again, the main focus is to see if the dollar can go higher to go lower in that void, right? Reject from that level and then continue to drop. And then this should follow up by going lower and then rallying higher, right? So yeah, with that being said, come over here to the NASDAQ. Well, let's look at the 3 indices. Yeah, so I mean, they've built up a lot of liquidity down here. They're really hesitant to try to keep going higher. I think it just took out all-time highs here. Yeah, for the S&P. And now we've rejected. So we got a large wick in here. We got a change in state here with this order block. Change in state of delivery. We got another change in state. It's a secondary one. Okay, so with that happening, if the DXY rallies and then we start to really push away from this, we're closed below this. So there's a chance for this to hold. This wick is kind of a pretty solid confirmation that it is going to hold. We got this wick here too, 50%. It's having a hard time. We have this large wick, right? So you could see that. That large wick with price trading back into it, it's acting as a balanced price range. Up to this point, it's still intact. And if we see DXY continue to accelerate, right, to the buy side, then this just starts to unravel and make sense, right, fully. And then we could eventually fully get behind the short position. If you look at the NASDAQ, we have the same thing, but even more exaggerated, right? We have the Dow failing to break highs, right? It's refusing. So we have this huge run up. It tagged into those levels that I've talked about for the last couple of months. I'll let you guys go watch some of the other videos to point that out or see. It's like a regular trading hours gap. It's equal highs, and it's also a new day opening gap too, right here. So price basically laid candles above and then laid candles back down below in a place that had heavy inefficiency. So now what? It's balanced. They offered both sides now, so they're satisfied. And we got one change in state, a wick, a big wick, followed by displacement, which is buy side and sell side. Price returns back into it. 50% of the wick never got traded to, couldn't even barely breach 25%. And then it created another order block here. And then that one's also been violated. And we couldn't even take out the high or break beyond the 50% of that wick there. And we have this candle from last week coming up into this, rejecting it aggressively. So we may be seeing this unfold into a market maker sell model. Okay. What's up, Yoda? Yoda? Oh, okay. I see what you did there. Good morning, brother. If you just hopped on, you're a little bit late. We've talked about a lot of things, so I encourage you to watch the replay. We're not done yet, obviously, but I don't want you to miss anything because we've talked about a lot of things. We talked about a lot of good things here on this channel. Every Sunday, we're doing weekly prep calls, process review, bias and narrative masterclass on how we're able to call bias and narrative every week and, year to year at this point, which I did publicly last year and will continue to do this year. We've been correct up to this point. We've been able to navigate all of July, even with how nasty it's been. It's been a little bit more testy, so the risk has been lowered, but that's the nature of the game, right? We got so many things happening in the world. The seasonality for November to January, it's generally shitty. That's why ICT tells everyone and, he encourages everyone to take time off or don't start engaging until February, right? Because you get past some of that early year chaos. You get past some of the holiday issues, smart money starts to come back into the market, and things just start to look a lot more nice, right? From now till June, generally it's pretty nice, right? August is a little messy too, right? So June, July, August. May can be kind of tricky because it could be a bit sporadic depending on what's happening, but it's manageable, right? We showed last year that it doesn't even matter what is happening. We're still able to call the market. It just means that you got to be aware. Like if you're in a battlefield and there's bombs blowing up, are you just going to treat it like it's a sunny day, right? Just nothing's happening and just run into the middle of the battlefield like you normally would if there's no risk? No. You're going to be more cautious. So that's, you don't have to not trade, but you have to know yourself. And if you take losses and it affects you dramatically, you should be really paying close attention to these times when this is mentioned. I didn't get this from me, right? I got this from ICT. Then I went and back tested it on my own for 6.5 years, right? And I've seen over that time that there's truth to this. The markets are on a program. It's very systematic. So certain things happen at certain times of the year. Everything's fractal. So Power 3, market maker models, all these things are taking place every single year. There's a yearly Power 3. There's yearly time frames that have yearly market maker buy and sell models. So there's just some things that you got to be cautious of. And just lower your risk around these times. Doesn't mean cut it so unreasonably that you're not going to have any opportunity. But it's up to you. Like I said, it depends on your risk. But I encourage you guys to be cautious. As I mentioned in November to the end of January, you need to be cautious because cracks and everything that I said would happen has happened. Massive cracks and correlation, crazy whipsaw back and forth, and prices just looked like a shit show. And we anticipated it before it took place. It's not the first year either. It's multiple years consecutively, publicly, right? More so publicly last year, and all this year and the years after this year, I'm gonna be doing the same thing. But yeah, there's truth to it. And unless you're in the markets looking for this stuff, you're not going to be able to gather this wisdom. So every year is just going to be like a fresh, brand new year that has no expectation, which is not true. There can be expectations every month. Like we did a second ago, we looked at seasonality, right? We talked about that a little bit. You guys saw that the DXY has a slight bullish run that's confirmed by upwards of 30 years, right? It's done it more often than it hasn't. That's why it's an average. That's why it's plotted on the seasonal chart. And you could see that the seasonal influence has already kicked in a little bit. With a DXY having a bullish seasonal influence, what has that done to the currencies and the indices? It's resulted in a nasty decline, right? After, of course, we hit our targets that we called for. So everything's done pretty much what we've said it was going to do overall. Even as far as us identifying what price's behavior should be or could be once it was to breach these highs here and, spend some time there, right? What could be taking place? And it's a rejection. That was SMT at the highs I talked about for the whole month of January. That played a role in this. Merge that with the seasonal influence of DXY being bullish, and you can kind of see how it resulted, right? So this is just from this month, you see an example of seasonality being powerful. It's just one more thing to add clarity to your assumptions. So then you can trust things a little bit more, right? And it should be shocking to see how systematic it is, right? So yeah. So with what we see here, again, we have that double change in state. We have that SMT at the highs still. We have the run higher, took the stops. We've now got the double change in state. So I'll be 100% behind the fact that it's going to be bearish here if we can get down below this low, because then it'll be just like this. large wick, came all the way up, and then displacement. If we have another large wick, which we have here, followed by displacement, then the 50% of that wick, right, and above, or just from the low there, should be treated as a balanced price range. But the 50% of this wick, once it's overtaken, especially if it's a fast move, that's a balanced price range, and it should act just like this, especially because we're coming off the SMT, especially because of the bullish seasonal influence for the dollar, especially because of the large wick in here that gets violated with the balanced price range idea. And even if it does end up being bullish eventually, this is the start of the new month. So if it declines and it ends up being bullish later on in the month, great, because then it's a bullish power of 3, right? And we got to get below the open price, which is going to form today, right? Once this new candle opens up for the new month, right? And then of course, looking at this chart here, you could see the SMT very obviously. That's led to what we've seen. But again, just like with the other assets, when I was talking about the most important liquidity that you look at when you're on these higher time frames or any other time frame, the most important liquidity is the current high and low and the previous high and low. The current one is going to be opening up here pretty quick, right? A little bit later, new candle's going to be formed. But once that opens up, if it wants to get to this high or to this low, it has to break through one of these, this high or this low. It's just the way it is, right? There's no arguing with it. So what does that mean? That means that this is probably the easiest way to identify liquidity, like the more significant liquidity pools. Do you have to understand the whole entire chart? No. It helps to see kind of where we're at, because then you can determine, okay, is it more likely to hit this or this? But regardless, you only have 2 options, this or this. Anything outside of that comes later, right? So you have literally 2 options. So look at how much that narrows down the liquidity from a large perspective. And then you move down to the monthly, the weekly chart, right? You could start from the quarterly, drop to the monthly, do the same thing, right? Let me put that there. But yeah, let me know in the chat if this makes sense. I know for some of you, a lot of you, it's going to be a review. Just let me know in the chat if it makes sense. Still 1 in the chat. And again, don't forget to like the video if you guys get value. Pushes the video out so more people can see it. And if you have anybody that you think can benefit from this in-depth type of call that I do every single week, right? Definitely share the link with them, share the channel with them. Because again, my goal here is to literally just help people. You know, it's the main objective. You know, and if we can get more people, that means more impact. You know, and if, you know, I didn't think there was an impact happening, yeah, I wouldn't even be on social media to begin with. I hate social media. It's just a cesspool of idiots, and fake lies and nonsense. Oh, there it is. Whoops. There's the monthly high, monthly low. Okay. And if you go to the weekly chart, right? See the monthly high and monthly low, right? See what that's inside of. Got this parent price swing, high to low. So equilibrium's right there. Isn't it ironic how on this higher time frame in the equilibrium area, it's doing what we always say it will do, or what it generally will do if we hang around that equilibrium price point, what you can expect for the condition, price being sideways, right? You could see the consolidation. So we got to break out. It tried here, but now we're back into the range. So again, the most important liquidity from this weekly chart is the weekly low and the weekly high, which ironically is the monthly high as well. So before this low, this monthly low is targeted, the first and foremost thing we have to identify, this is the same for every asset, by the way, right? This process that we do here, if you can understand it with how I'm teaching it across all, 8 of these, bonds, yields, currencies, indices, gold and silver. If you can understand it through all 5 of these assets, which is all the same process, just different asset, you can understand it with everything, crypto, other commodities. It doesn't matter what it is, right? It's all the same things, right? And eventually, the longer you guys spend time here, the more it gets ingrained into your head. And by default, you're going to have no choice but to understand this stuff, right? Because I don't overcomplicate, right? We get right to the point with what we think price is going to do. I highlight literally the most important liquidity pools. Generally, it's doing what we say it's going to do, which I've proven publicly. And every single week, right? Last week was no different. This whole month was no different in January. It's just picked up right where we left off, which we didn't even really leave off. I've been live all through the holidays and everything, right? Even with broken fingers, I'm still out here hopping out at 3 a.m., right? But it just works, right? So look at the chat. What about crypto? All right, I'll pull up crypto in a little bit when I get done with this. Okay, Tony said it makes sense. All right, cool. So yeah, and then like I said, we can start from the quarterly, go to the monthly, then go to the weekly, do the same stuff. Close proximity PD arrays to where price is at. The current high and low, the current candle, and then any of the previous ones that are in close proximity. And you just keep dropping lower, right? So we got the weekly low here. We got a order block here. It's kind of been blown through, but price is respecting it. Equal highs. Again, we have the regular trading hours gap from months ago that I've continued to keep your guys' attention on. It's ironic that they traded up through it and then immediately came back below it. This one too. Why? Because it's inefficient. So it's a magnet, right? And prices gravitated all the way up there slowly, and we've kept that in our scope. And again, we've been correct. I can't remember a day, especially not a week, where we were not correct. I can't even remember a week, and everything's recorded. So you can go verify that, which is a pretty incredible statement. It's incredible, right? It's shocking to me even. I never thought that I'd be able to call the market, but yet let alone teach others, and then they're doing it too. I mean, it shows how transferable this stuff is, and it's up to you to build the trust. And hopefully this channel helps you guys build the trust and kind of solidifies the fact that this stuff works. There's no question. There's nothing better than this. Like, there's nothing. Go find a YouTuber or other live streamer that's outside of the ICT community who does it like this, who's able to call it consistently like this. And then those of you that are in my private group, I mean, we do this every day. So we do it with every single candle, every moment of every day, at least in the AM session. And we end the day generally being correct. Doesn't mean we're 100% with the trades, because that's impossible. You know, you're going to get wicked out. You're going to enter too early. You're going to enter too late. It's going to move too quick and you're going to miss it. But overall, where price is going to go, it can't escape us. And we've proven that. And you guys have too, right? You guys send me stuff all the time. So, but yeah, so again, the weekly low, weekly high, monthly low. That's close proximity. And you come over here to the daily chart. You got Friday's high and Friday's low. So before it gets into even the weekly low or the monthly low or the weekly high or the monthly high, we're going to have to break outside of Friday's low. This candle's going to open up a new candle for the week. We're going to be inside this Friday's range. So the very first fair value gap, or the very first liquidity pool, is going to be this candle's high and low. Which one? Well, we have to see, right? Because we're now back inside the middle of this giant ass consolidation. So, you know, we may stay there. You know, it is the start of the new month. It is FOMC. So if there's a big move that breaks out of this, it's probably going to wait till FOMC comes out, or NFP. We do got news events happening prior to that. So Monday and Tuesday may be pretty exciting. So we're definitely going to see about that. And yeah, we're inside this daily fair value gap. This here, let's see, what is that? Oh, that's a suspension block right here. This is a giant suspension block. Volume imbalance, drag it all the way over. It's a really, really massive suspension block. So the quadrants on that may end up being significant. Just for an added context, you notice how it's kind of slashed right through it. Do we have another one? Yeah, I think there's one right here too, actually. I think I like that one better. Yeah, it's a suspension block. So yeah, we'll see. So this is another thing that can hold price below if it wants to continue to go lower. So we have this high, low, higher high. I wanted to see if we could respect this and then look to continue to push, but clearly there's lots of liquidation happening. So price came down. So we'll see what it wants to do from that, right? But again, if we get down below this candle's wick and we trade below this and we trade below the suspension block I just pointed your attention to, and we get back down below this gap and we violate this low, all of this area should act as a balanced price range, and then we will end up targeting this trend line liquidity. But we have to wait and see because that's huge. Very nasty. It's FOMC week. So it's going to set the tone for the month, right? It's definitely going to set the tone very, very soon with these news events. And then we got relatively equal lows down there as well. We got the monthly equilibrium. You see the high extreme to the low extreme of that range from the monthly perspective, 25% of that. You see how that was very sensitive? It's very interesting, right? We take it from this high too. If it is going to go lower, you can grade that price swing as well. So we're at equilibrium here for that range too, ironically. So we'll see what happens, right? We're beyond that. So if it is going to be a sell model and we do close below this, I think it's going to be pretty high probability that we'll sweep this out, especially if DXY holds up and goes higher. But if DXY rejects and goes lower, we may reject here and continue to go higher. And then in that case, wherever the low forms, when price decides to turn around, if the dollar does what I just mentioned and continues to rage lower, we may see this halt and then start to move higher. And if it does, we take this high to that low, and then we measure that out and we get our new graded price swing. Otherwise, this will be the range that is going to be graded. And this wick is going to be significant, right? If we stay below that, if we stay below this, then we'll look to try to see a sell-off. And second stage distribution will come from down here. And that'll probably be where I decide to do some of my normal size trading because it's February. And we may get something nice. Right, but we'll just have to wait and see, right? Again, anyone that's new, the more that you hop on these calls, I'm very heavy on teaching you how to do it yourself, not just take my opinion. You can obviously do that, but again, I'm teaching, right? I'm sharing the process so you can learn, so everyone else can learn. And it's constantly repetitive, the same stuff every week. So if you want to learn how to do this, the more that you show up here, by default, you're going to end up being able to learn this. But that's not what you're trying to do. You're going to have a real irritated time because I'm not calling just signals like, hey, buy and sell. I'm saying this is why I'm going to buy or sell. And this is where I think an idea is, but based on your model, you got to make a decision. I'm not going to tell you whether I'm in or not, right? But I do, of course, give bias and narrative every week, like I've just done throughout this whole call. And we're generally correct more than we're not. And the only way you see that is by vetting me, by coming back, seeing what I'm talking about, show up wanting to learn. And I'm sure you'll get more value here than most channels outside of ICT's channel himself. And a handful of others, like some of the charter students like JCap and Trader Kane and whatnot. Trader Kane's kind of being a little controversial, saying macros aren't real and whatnot. I prove every week that, they're real. So what do you call it when every last 15 minutes and first 15 minutes of every hour delivers a rapid expansion? Almost every one of them. What do you call that? It's definitely not a not real event, right? And every trade that I take is inside of a macro. And what we do works, right? So it's not really much of an argument, except the fact that they're trying to be controversial. Him and some of these other guys too. Don't let that fool you. That's not doing a service to the community. That's trying to be different and controversial to gather a crowd. And it's unfortunate because it'll push people away from focusing on those things that work because they're trying to be different. And that's self-serving. That's not, let's serve the community. That's, I'm serving myself because it's controversial. And then the hatred of ICT from people that don't even give his stuff a chance, they get stirred up. And then they gravitate to the guy that is good because he's on the back end using ICT's concepts, but he's being controversial. It's all a psychological operation against unknowing people. And then you add good marketing and you add all these, let me look at my Lambo type vibe, and it's very easy to be manipulated. But there's no manipulation here. The chart speaks, and it speaks very loudly. So again, the only way you know that is if you show up. Keep showing up, right? As you guys do, right? Love you guys on the call right now. You guys show up all the time. So you see the fruits of it. So, but yeah, let me know in the chat if everything makes sense for what my narrative is, what I'm looking at. It is range bound, right? But again, I'm looking at this low. If we can get below that, I'm confident that we're going to target this low. If we don't break through where we're at and we continue to respect this wick, we stay above this daily inversion for value gap, which is here. Right there. If it stays above that, then we'll look to go higher. Right? And then this as well, can use that. If it gets outside of that, that'll be another thing to use. If it gets deep into this right here in itself is a suspension block. Okay. So we'll see what happens. And let me see, is there anything I missed? Yeah, and you can still see that order block held up, wick held up, wick still held up, wick held up here too. So we'll see what the next candle does. If we start to lose this wick, that's another early sign that price may look to continue to go lower. And we got trend line liquidity here. So there's stops being left there. It did sweep this one. So it failed to go down there again. But if this continues and then we start raging back towards the buy side, again, if we go back to what I mentioned earlier from this daily chart, right, we have the different levels. We also have the 25% of the yearly wick here. So I'd prefer to see us stay below that. That is this wick on this yearly chart. So could be a very sensitive level. And again, we have the daily wick there. So I don't want to see us break beyond the 50% of that wick if it is going to go lower. And if it does choose to do so, then we have what we want to do, right? And if it breaks it, we have what we want to do with that too. Again, we are range bound, so we have contingency plans. I'd prefer to see if the dollar does choose to go higher, right? If it does blow through some of these levels from earlier and gets us deeper into this, then again, that may send this lower and it'll send this lower too. And then this will become even more significant, this wick, in terms of it being a balanced price range. And the S&T will have been the catalyst showing us foresight that something on the back end with smart money is taking place. That's what the Kraken correlations using SMT is showing you. It's also showing you respect to a particular level if you have SMT at a level. So everything will start to fall into place if the DXY rallies higher. And then we violate this low. So for now, given that it's so nasty aggressive like this, we got to observe that. We'll see what the first 2 days of this week do. And then by Tuesday, we'll have a good idea, I believe, what's going to potentially happen. And we'll gauge the weekly profile and whatnot. And we'll see what the likelihood is of price doing one thing or the other. Again, my main objective, given this, if DXY keeps going higher, I want to see this go lower. I want to first see us get below this low, though, because then any return back into that should be looked at as a accumulation of short positions in a market maker sell model. Okay. So yeah, it's pretty much my opinion. I don't think there's much more for me to go into. You see the power 3 here for the January delivery. Consolidation, manipulation below the low, distribution, cap of the monthly range with this huge decline. Seasonality going into February is bearish for the indices. It's also bullish for the dollar. You see that in terms of timing and characteristics seasonally taking place here, right? Just further reinforcing how reliable seasonality is. It's like a treasure map. ICT doesn't say things just to say things. Sometimes he does, but with this type of stuff, when he's highlighting a tool, he doesn't just say stuff to say stuff because he truly wants us to succeed. And honestly, this is pretty telling. I just showed you the seasonal chart, and you see that it's done exactly what the seasonal chart says. DXY higher to start February, DXY higher going into February. And the NASDAQ goes lower. The other indices go lower to start February. And we can kind of see that's manifested, right? So yeah, on MNQ, we're back at 50%, 20% of the yield. Yeah. We just pointed that out. So yeah, we'll see how that 25% of the wick is treated. If we stay below it, again, it's just another reason to see this wick being respected here. 50% hasn't been able to close above. We tapped into it, but it failed. So now what's left? What's available here? Well, we have a gap down here. So price may look to want to dive a little bit lower. Remember, last year we called the low of the year. If you go back to the start of last year, I think like May and April, that's when this low formed. We called this low. And then once Trump talked about the tariffs being lifted, how he's not going to do it, that's what made price rally. And we got the whole process that we've analyzed and talked about real time. You guys can go back and see that we literally did. We were probably the only one, maybe, in the whole entire industry that called that as a low confidently and then continued to push it higher. While everyone was fearful because they don't understand what the hell they're doing, and they're swayed by every news headline and just anything that anyone says. While they were being distracted, we were precise. And I have all of you guys that witnessed it. Anyone that's new, I encourage you to go see what we were talking about because you'll see, right? or just keep hopping on. You don't have to go back. Just keep hopping on from now on and you'll see. Okay. So yeah, do you guys have any questions before we move on to gold? And I think beyond motivation, if you're still here, I'll hop on some crypto. If you left, then I'll just be worried about gold. Unless some of you guys want me to talk about crypto. I know in my private group I talk about XRP. We did a breakdown on it the other day. Well, for the last couple of weeks, but yeah, just let me know in the chat if everything makes sense, if you feel like you're prepared now, at least with a good idea of what could happen. And if you guys want me to talk about crypto, could answer that separate too. The best drink on the planet. And it's cold. Was hot, now it's cold. The best. I don't care what no one says. Yeah, just wait for the best setup based on what we know. Yeah. Yeah, Tony, you've been here for a whole year. How would you say that your learning has improved? Would you say that it's like dramatic from the start when you first met me? Thinking about where you were at up to now, like, do you think that your navigation skills have went a lot higher, like parabolic, or modest improvements? Definitely curious. I know that you've been doing pretty well. Complete 180 with the knowledge. Perfect. Perfect. Yeah, I'm assuming that the Beyond Motivation student that asked earlier is not here. Guess he must have done what all these others do. Show up, ask for something. If they don't get it, they leave. Very interesting. But yeah, you know. Oh well. Yeah, those of you in my private group, if you have any cryptos you want me to look at, you want to hop on later, I can hop on. I don't care what it is. It could be stocks, crypto. I don't really care. It's all the same. By now, though, you guys probably can do it on your own. But if you want my opinion, I can give it to you. But I don't trade crypto. I long-term invest in crypto. I know ICT says not to, but hey, it is what it is. Might as well ride it while you can. Screw it. Even if they take it, I really don't care. I've already made enough off of it. If they take all of it now, it's not going to do anything. It's all good. I think it's here to stay, though. Everything's shifting, whether we want to believe it or not. So, but yeah, so for gold, we have this little gap in here. This was a huge liquidation event. When you look at it from this higher time frame, it doesn't look as scary as the news tries to make it. It just looks like we've been parabolic, and then price had a nasty liquidation event. Silver did even worse, right? That was even more nasty. And they say all this stuff like, oh, it's the biggest drop in history. Okay. After the largest rise in history, and we're still above where it was at a year ago? Is that really that big of a deal? I mean, anything that goes, this just shows you how much people don't understand about how the markets operate and how they use things in the market to scare people, the uninitiated. You know, I mean, I'm not going to touch this because I got to see what this is going to result in. Who knows, right? Because that was nasty. It's obviously this is them coming in saying, "Hey, we're here, okay? The invisible hand is here, right? So you better be careful because we will liquidate you, and your stop will not be respected. So, you know, get greedy if you want. Try to hit home runs every day if you want. Over leverage if you want. Over trade if you want. But they got the Grim Reaper here, just waiting for you to get caught on the wrong side on accident, unexpectedly. You know? It's not a time to mess around. Treat it like a business. 20 to 30 points, get in, get out. Do not hold that much. If you can get offered more, great. Once you're offered double, right, maybe 60 points, take most of it off. So it's so low that even if they did do something like this, you're not going to take too much of a hit. You know, if you did get caught off on the wrong side, but don't swing trade right now. Don't short-term trade. Don't position trade. It's not worth it. You know, I can't give you financial advice, but hey, you make your own decisions, but that's my opinion. But yeah, so we'll see what happens in here. If it displaces again back through this, we have a change in state of delivery here. Okay. If we can get another order block to form and then it breaks through that, we had a market maker buy model here that we called, perfectly worked out as expected. But if we get price to get down into this level here, say we have an order block that forms and then it violates it, we'll be able to see that as a double change in state of delivery. Look, just like how I was talking about over there on the NASDAQ, the large wick, treat it as a balanced price range. Large wick, treated as a balanced price range. See that? 50%. This is a large wick. 50%, 25%, lower 25%, continued move. That is a balanced price range, right? And if it's going to be bearish, if it's going to keep going lower, it needs to respect it. That's order flow being shown to you in the plainest terms, right? Order blocks, wicks, fair value gaps. How are they being treated? It gives you all you need to know about what order flow is at the current moment. You know, just like we talk about all the time, right? Just like you guys see me doing all the time. And I think it's exactly what I see you guys doing yourselves now all the time. So just keep it up. What we do here is superior. ICT Concepts is superior. And given the amount of recorded sessions we've done, the whole entire year straight of me calling bias and narrative every week, there's not even up for debate anymore. There's no question anymore. Except, you know, when people are new, they're like, oh, I don't know, I haven't seen it. Okay, well, buckle up. It's not a once in a lifetime thing. Like this happens every single week, every month. So yeah, I'll be seeing you guys. All right. Prove me wrong. Come in here and try to trade against what I call out. I think it'll be a great idea. So yeah, this is like a gap in here, I believe, a daily gap. Yeah, it's a daily fair value gap. So with that balanced price range in there, right? That huge wick, is it? Yeah, the huge wick in there, overlapping up candle, down candle. That's a balanced price range. So it should not need to come back up there. Same with this fair value gap. It's already displaced through it. There's no real need for it to come so deep into the upper area here, unless it's going to turn, right? It could do that. It's wildly manipulated right now, so it could do whatever the hell it wants. But ideally, if we're watching price logically, based on what we know, we should be able to respect this. It should stop there if it does come up there, or not even attempt to get up there anyway, because this low up to the high should be balanced at a minimum, because we've got massive buy side, massive sell side overlap. And now we've got this overtaking of this fair value gap. So we got sell side, well, buy side offered. Anything that was inefficient to the sell side or buy side has now been offered here too. So if we were to get back above this fair value gap and then use it as support and then break through this level, that's when you will know that it is safe to get back in line. Not financial advice, not a financial advisor, but technically, right? If you're thinking in terms of the price action, reading price, getting up beyond this would be where I would feel personally safe to then get back in line with buys. Otherwise, who knows if this is going to try to target the lows down here, right? If it stays below these levels, I think that it has a little bit more space. It's got the gaps in here. It's got a gap in here on that weekly chart. So it may look to come and fill that in. We have a gap in here, right? A lot of that stuff's still inefficient. Gap in here. So it may look to try to wipe some of that out. So we'll see. Right, but if you look at the weekly chart, this just simply looks like a retracement. But if it stays below these things, again, we'll see how this treats this, because if it respects it, then we'll look to be in a market maker sell model, and then we'll engage according to that. But this here is my line in the sand. All right. So yeah, that's my opinion on gold. Do you guys have any questions? Tony said, I'm able to make things happen for you. Yeah, good. Good, I'm glad. Yeah, it's unfortunate. It's unfortunate that, you know, people's mindset is what it is. I mean, even with people that look at ICT's concepts just from ICT, doesn't matter what he shows, doesn't matter what he does, there's still people that just don't even pay attention. And it takes time. People that hear about ICT the first time, a lot of times they don't stick to it first. It takes a while. They have to see it for themselves, hit rock bottom, and be like, you know what, none of this stupid BS indicator stuff works. I've lost so much money. I'm just like in the dirt. Let me try this because I didn't give it a real shot. And then they try it and they never go back. You know, I feel like it's kind of how it is here too. Someone watches for 5 seconds or maybe one video. They're like, and they don't stick around to see how often this stuff happens. They just see it once. Maybe it's a call where everything's a shit show. And then they just don't even bother, you know, even though things are explained in such a very easy way. But then they come back again after there's been months, right? And then they stick to it. And you guys that have stuck to it, I mean, everything is pretty spectacular, if you ask me. Got some wild achievements happening every month in the private group here on YouTube as well. But I've learned over the years you can't save everyone, you know. So it is what it is. It is what it is. So yeah, let me know in the chat if you guys want me to talk about any cryptos. Do you want me to talk about cryptos or you guys don't care? So I'll talk about like one or two if you want. But if not, we can put this to, or bring this call to a close. Talked about pretty much everything I wanted to talk about. You guys may see me engage some gold and silver in the next couple weeks. I did last year on a Sunday, made $4,000 and I showed it. The rare instances where I show profits, even on a day that I don't really even do anything normally. First time in 4 years I traded on a Sunday. First time in 5.5 years I traded gold. Tony said yes, please. Okay, which crypto? Which crypto do you want me to look at? These are the cryptos I like. That's my ETF. It's my personal ETF. Oh, Beyond Motivation is here. Oh, I asked if you were here, brother. I was like, is he still here? All right, let's... Okay, let me see. We're going to have to use this one, not the futures contract. But yeah, so just going to do the same thing. Let's go to the quarterly chart. Okay. It's got that stop raid that's led to this overlap. So buy side, sell side. Looks like we may be having a bearish breaker forming here for the quarter. So I think this low is going to be tagged fairly easily. Got this gap in here. Looks pretty obvious that it's going to reach for that. And then if it gets below this, what you would be watching is the low, high, lower low, also inverting this fair value gap. Unless it was to get beyond this upper portion up here, I think it still has a ways that it can go lower. This would be an invalidation here. You see how it respected that? In my opinion, that's confirming the breaker is holding. And we left this available, so that's a breakaway gap. So we got a breakaway gap. We have a up movement, down movement. After a stop run, heavy displacement to the downside. And we have a pretty obvious piece of this gap that's available. I guess it kind of did trade. It basically overlapped most of it, right? But yeah, it looks like it's still interested in trying to get down there. So we'll see how this area is treated. But that's from the quarterly perspective. Again, the most important liquidity, if you were to trade this, would be the current high and low. Quarterly high, quarterly low. And again, if this was to break down through this on a quarter basis, this is like 3 months at a time, so it takes 3 months for this to unfold. But if this was to close down below this and invert that, we have a breaker, inversion fair value gap. That would set the stage for targets like this to be targeted. And then we'd also have this wick in here to watch as a target too. 25, 50, 75. That all comes from an inverted portion of this. Like if it inverts, comes back into it, respects it, starts displacing again, then you can position to try to target some of that. But let's go to a more day-to-day basis after we have that baseline. And again, most important liquidity from the monthly, weekly, daily chart. From this monthly perspective, it's the previous month's high and low. So that's what this low is. It's a quarterly low, but it's also the previous month's low. It's also basically relatively equal lows, a failure swing. So it should be able to slide through that with little resistance. And we also have this wick in here. We should not see an attempt. This should be a breakaway gap. Why? Because the wick is overtaken by a displacement. So any type of return into this should be shallow. My expectation is not that it's going to fill that whole thing in because it's already efficient. It has sell side and buy side because it's a wick, right? It has to go up and down in that area to offer a wick. And then it's followed by displacement. We also have a breakaway gap. So that's heavily influencing price to go lower. If this was going to continue to be bullish, it would have went from external to internal, being the order block, fair value gap, the high here, right? Like this up candle here. We got a high, low, higher high, should have been a breaker, bullish, but it slid through it, right? And now left the relative equal lows there. And again, this wick should not be traded through if it's going to continue to be bearish. We have this wick. The 50% of that should also not get traded to at all, honestly. If it does get up there, then bearishness is going to be on hold, and we may range. It may go sideways. If this high is taken, that puts us back in line with bullish order flow going to the buy side because it'll be a bullish order block. It'll be an up wick. If it's followed by displacement, it'd be the same idea as this, just to the upside. Be a bullish candle, trading back into it. It's a balanced price range. So it should hold price and continue. But this is what we're looking at right now. Relatively equal lows. I think that's the next target there. Then we got the rest of the fair value gap here. All right, so that's, from a quarterly basis, that's wide open. And we got the monthly low here, monthly high, current monthly low, monthly high. It's a new monthly candle here. So I wouldn't be surprised if it doesn't breach this yet. And it does try to run back, because we do have a gap in here. We got this high of this candle to the low of this candle. So that is a real inefficiency, at least for the moment. Maybe this month fills that in with this current candle and it doesn't happen to be there anymore. But I don't think it's going to go beyond this. If it does, it can't break past the 50% of this. If that happens, we're looking at this wick, right? And then if this 50% is violated, the high gets targeted. And if that high gets targeted, we're looking for this high. So there's lots of levels in here to watch to continue to respect that it's going to go lower. So again, my intention is to target price going to the downside. All this stuff is the same stuff that we do on the other assets, just in the context now of crypto, right? And it doesn't change. It's the same. Give me any market, I'll tell you where it's going to go, right? Is it forming a bearish breaker? Yeah, like I said, if it gets below this, then yes, right? It looks like it's beginning to respect it here. So low, high, lower, low. So again, if that does form and we do what I just mentioned, it inverts this fair value gap, and it's not a small wick through this that ends up coming all the way back into the range. If it displaces through that and overtakes this, my next objective is any of these lows, but specifically this wick here, which is I think a quarterly wick. Yeah, it's the quarterly wick. So any of those quadrants could be a price target. That is if it inverts this, right, breaks through it. And then beyond that, we have the gap down here that could also be looked at from that quarterly perspective, right? It may look to target that. Something you can do too, if it does break this low here, take it from this high down to that low. Might be a little much. You could see the low there that I have. See how perfectly that aligns with a standard deviation, the half a standard deviation? That's phenomenal confluence off of a breaker, high and low. Measure that out. If it is going to be a sustained move lower, we may get down as far as 48,000. The crypto world would lose their mind if that happens. It's not going to feel too good, that's for sure. But hey, that's crypto. It's just the nature of the beast. So we'll see what happens. So yeah. How does this analysis affect long-term investing? Like, how can you use this and find positions long-term? Well, if you're trying to be a forever bull, you're just trying to buy in and hold long-term, well, you take it from this low to that high. Anything at a discount, that's a discount relative to where price was at, right? So anything below this, right? You could dollar cost average. Again, not financial advice. This is what I do. Okay. It's not telling you to do it because I'm not licensed to give you trade advice. But this is a way that you can use this way of doing analysis to manage a portfolio long-term. That's how I do it. And honestly, the way that we do analysis tells us where price is going and where price could turn or where it could target, right? It also provides us entries because we have entry models. We have 4, right? Any of those entry models that show up, if it makes sense for price to go higher, we can engage when it shows up. And again, we're right more than we're wrong. And we've proven it. Not only me, but students like Tony, students like Fritz, and many others. So yeah. So my intention here, unless this high is taken entirely, it's going to be this gap. It's got a failure swing right there. So that's low resistance. So it should be able to slide on through that. Right? Couple that with this fair value gap, and it makes it highly likely that it's going to target that. Maybe it does it today. I'm not sure when it's going to do it, but I know that that's where it's headed. And if it gets real excited, don't be surprised if we end up targeting 55,900. Well, you could look at 60,000 as one, 55,000, and 50,000 flat. 50,000 flat is a full half a standard deviation from the breaker high and low. So that's a really reliable extension confirmation, especially lining up with a perfect low and a PD array being quarterly fair value gap. So, and again, this is the line in the sand. This will get you back in line with thinking bullishness. And then once it gets above that, this will be a balanced price range, and you'll just do the same thing I did here, right? But right here, going to the buy side. And this will be an inversion here, right? Like how this was an inversion here. This fair value gap would be an inversion over here. And then think about what you would have here. You'd have a stop run. If it was to take the stops, then go. Let's just hypothetically say that. If it takes the stops here and then displaces through this, you now have a stop run. You know, there might be a fair value gap here still that gets inverted. You'll have a shift. You'll have another inverted fair value gap. You'll have a balanced price range. And so any trade into that could be a good potential opportunity to see price continue. Okay. So yeah, you're talking about an order block, meaning these up candles here. It's a breaker order block right there. Just if you move up in time frame, a lot of times things overlap. It's kind of this. I'd have the same thoughts. Breakers, order blocks, they're all pretty. It should be reactive. So again, this is also low resistance. I don't see crypto going bullish anytime soon. Right? Bitcoin, XRP. Yeah, XRP is amazing. I've been investing in XRP since 2019. 20 cents. I mean, think about it. Imagine having a loaded boat from 20 cents. Now it's like what? It's hit $4 multiple times. That's like thousands of percent. It's pretty interesting, right? And XRP has so much behind it. It's worth looking into. There's a cult-like following behind it, but put that aside. Look at what XRP's had its hands in since day one. XRP is literally a technology that was created to literally replace the SWIFT system. That's what it was created for. It wasn't created to overtake Bitcoin. It was created to enhance and replace the archaic SWIFT system, the International Monetary Fund SWIFT system, right? And it's already got its banking license. It has over 300 partnerships with big banks all over the world. It's in Saudi Arabia's financial infrastructure already, so it's already being used. It's already being shown that it's powerful. It's definitely the crypto that I have the most horses in the race for because it's easy to understand and they're active already. They are the only, think about this, they're the only cryptocurrency in the entire crypto world out of what, 7,000 or whatever assets that has worked with regulators since day one. But because it's trying to replace the SWIFT system and it's a direct competitor to the banking system, politicians that have the banks in their pockets, people that are funded by the banks, they hit them with a lawsuit, a fake lawsuit, that now, last week, officially has been completely withdrawn. So they're now completely free to do whatever the hell they want because they're already in with the regulators. They've already been working to make things proper because their goal is to replace the SWIFT system. Go look this stuff up. My crypto mentor for the last, 5 years, his name's Coach JV, for those that may be interested, who like crypto and whatnot. Crypto is another world where it's hard to find people to trust. Go look at Coach JV. You'll instantly see why this guy's my mentor. I have him as a mentor for crypto. I have this other guy named Tall Guy Tycoon, who's stocks and crypto mentor, like long term and just overall financial education, right? And then I have ICT and 2 other students of ICT who have more than 10 years each that are my mentors, right? This is how I am where I am today. It's because of those individuals. And I couldn't be more grateful. By the grace of God, I was able to find these people. Because I was fumbling. It was brutal. Yeah, it's been a wild journey. You stay in this industry long enough, without the right guidance, it's rough. That's why I have a YouTube channel. That's why I do this. Even if it's like one person listening, it's still worth it, because I know that I'll be able to save that person from hurting themselves, or at least try my best. And I feel that I've accomplished that with over 200 students. So I'm glad I started, because I almost didn't. I almost said, screw it, I'm just going to be in private, which may happen eventually. I mean, we all get to a point where, especially if we don't have to be public and we like our privacy, we get to a point where we start thinking about that, but that's not going to happen anytime soon. I still got lives to change, okay? So, and again, I have resources for many things: crypto, financial education. I have actual information that I've used from people that I trust. It took me years to figure out, like to sift through the cesspool of nonsense on the internet. Through all the chaos, I was able to find like 5 resources, and I'm grateful if you guys see me as one of your resources, and I don't take that lightly. That's why I'm here all the time, broken fingers and all, figuring it out, sick or not, whether the call is large or small, no matter who's there, I'm still on a mission, and even if it was one person that I can help, which it hasn't been, it's been over 200 now, which is crazy to think about. It makes it worth it, because I get to pass the blessing forward. And I think that's one of the best things you can do if you've been blessed. Don't hoard the blessings. Spread it to your friends, spread it to your family. So yeah. Oh, another thing, the QR code right there. If you guys want to know about my one-on-one mentorship, or just like my private group, if you want to be a part of this type of call in even greater detail on a regular daily basis, we go live 6 days a week, because I have students that I have to do one-on-ones with on Saturdays, so it kind of takes that day away. But when that changes, it'll be set back to 7 days a week. But yeah, if you want to check that out, the QR code's there. Link is in the description as well. And I was gonna say something else, forgot. Yeah, I'll remember in a minute, hopefully. Hopefully, just flew out of my head. Let me see. Got a platform question. Would you trade one big account? Oh, I would much rather trade multiple small accounts. I would rather trade 5 50K accounts than one 250K account, honestly. Especially with these companies, because a lot of times the rules change with withdrawals and whatnot. Sometimes the rules change. Sometimes the ratio is a little bit better. And you can multiply those small accounts. I'm not aggressive. So I like having small risks. So if I can have multiple accounts, I have a big personal account that I trade, but there's no rules on that one except the ones that I employ. So there's not that added stress. So I could do whatever the hell I want on that, which should be your goal. Should be to get out of these funded accounts, do what you can, get like, $20,000, $30,000 and move to a personal account. Keep the funded accounts for a while, but move to a personal account. It's the best way to do things. You have full control and you're not at the will of these companies staying alive. Some of these companies go under. And you guys that have been with me for a while, you heard my horror story about stupid FTMO. They fucked me over, and they didn't fix the problems that they caused. They caused me chaos. Completely removed me because regulations changed, and now all of a sudden they're back supporting U.S. traders all of a sudden. So what was the purpose? What was the point in you removing people if you can now do it? Regulations haven't fully changed. It just like happened for a couple months or like a year, and then you just came back like. And I emailed them and they said, "Oh no, well, we're not going to justify that just because you got kicked out. It's unfortunate, but pay us $500 every month again." Really? I mean, it's pathetic. It took a while for me to trust funded accounts. I still have a skepticism on every funded account because this can happen to anybody. And I had $400,000 funded to $200K and $60,000 withdrawal loading up. It's going to be my biggest payout I ever got. And I didn't get an email. I didn't get anything. They just cut me out. No email, nothing. I had to reach out to them. And it took them 4 days to get back to me. And I'm like, what the fuck is happening? And they're like, oh no, regulations changed. So we canceled it and you can't trade with us no more. So bye-bye account. And then I hit them up, 4 months ago saying, hey, well, you guys did me so dirty. And like, can I come back for free? Because like, why not? Can you justify this? Right? And like fix the problem, the situation that you caused me. And they're like, oh no, we're not going to do that. You got to just start over. I'm like, I was literally with y'all for a year and a half. Really? Really? So I will never be back. Tradeify doesn't seem like they're, it seems like they're really, really nice. They're really good. So I encourage you guys to go to Tradeify. I do have a code if you wanted to use that to get a discount, even if they're not promoting a discount. The code WMG, you'll get the best discount. Whether you do or don't, obviously, it's not my concern, but if you can't find a code, you can use mine and it'll always be the best. And when they're not promoting something, there's still a discount, right? So you can always get that with the code WMG. And again, you don't have to. If you support the channel, I encourage you to do it. It's kind of benefits you and kind of supports the channel. Me doing this, right, on YouTube. But if you don't, so be it. But that option is there for you guys. Yeah, let me see. Damn, they got you too? What a mess. I just had my account doubled that month. Got one withdrawal with extra, then wow. With FTMO? Tony, that happened with FTMO? Fucking FTMO do it to you too? Now there's no reason for them to do it because that'll be just like dirty. They're in a different country too, so I tried to sue them, but I discovered that they're in a different country, so I can't sue them. If it was an American company that did that, they could get sued because they would have to pay you out because it's already in the process. You did the work, it's like doing a service for someone and they don't pay you, and they're supposed to. Oh yeah, my Forex funds, yeah, that's a shit show. Yeah, no. Yeah, what a mess. I heard a whole bunch of stories about that. I was about to say, if FTMO is still doing this dirty ass shit, oh god, dude, we need to go on a campaign to just expose these idiots. Seems like they're doing better now, but I wouldn't even trust anything that's outside the US. If you're in the US, don't trust anybody outside the US because you have no protection. If this happened, the thing that happened with FTMO happened to me in the US, I would have 10x'd my money because I would have sued the shit out of them. Because it's like providing a service that you're supposed to get paid for, but they just refuse to pay you out. So they can be sued. So yeah. It's kind of just the way it is. Crap. Oops. Yeah. It's unfortunate. That's why you got to make sure your main goal, your main objective, you guys, is to get out of funded accounts. You know, use it for now. It's a good resource. I'm not going to sit here and say it's not. It's a great resource. It's something that you should be utilizing if you can. See which company works well with you. I think Tradeify is the best, but it's really up to you, you know. But yeah. So I hope that this analysis was clear beyond motivation. I hope that was clear. Hopefully you got what you wanted from that. But with that being said, I can't end without looking at XRP. Okay. This is my baby right here. The best investment I've ever made. It is kind of taking a hit right now. That's okay. You know what that means. Know what that means. I know what that means. So we got this high to that low. This high to that low. We got 50% of that. It can go all the way down into that. Honestly, I don't want to see it break beyond that. I don't want to see us break beyond that. We'll see what happens. I know that all of this stuff that's happened in the crypto space, if you guys have been paying attention to some stuff that's been coming out, I think it happened yesterday or maybe even on Friday, but there was an Epstein drop information in XRP, Bitcoin, XLM, all that stuff was being talked about by Epstein, saying that, oh, that's in direct conflict because he was talking to a banker. And, oh, it's in direct conflict with the system that we have here, right? So it's bad for us. So we have to figure out a way to neutralize this threat. It's very bad for our business. I don't know how that is used, like Epstein being against crypto because his banker buddies are there. How the hell does that make things drop? It's just an example of them using anything that they see, right, to just manipulate everything against us. It's just the way it is, you know? So, yeah. So, yeah, we'll see what happens in here. All right, maybe you look, if Bitcoin drops aggressively, I wouldn't be surprised if it shoots this a little lower. We'll see. We do got a order block here. So we've got the low, high, lower low. Seems to be respecting this as a balanced price range. See how it dropped below this low? Price came back. You see how perfectly price stopped at that? You see this wick right here? See how it is overlapped by this fair value gap? It's a breakaway gap. It's an institutional order flow entry drew a continuation. See that? No need for it to get up in through that if it's going to continue to go lower. And there was also a fair value gap here too as well. So it stayed below it and then bang. Order block, returned into it, bang. Another return into this wick, bang. One more time into that, bang. Quadrant right here, right? From this low to that high, 75%. Beautiful. Right? So yeah, I don't want to see it break down below this too much. Maybe it spend some time in there, but we'll see. I don't think we'll end up getting down below $1. If we do, that's pretty amazing, actually. Because banks are loading up. They just got their banking license, right? The lawsuit just got completely wiped out. So I wouldn't be surprised if this is one last ditch effort for the institutions to get in at a cheap price, and they're manipulating it lower so then they can load the boat, get everyone to sell because now there's good news coming, like at a rapid pace. And then all of a sudden we go up to $8, right? I mean, it has so much. If XRP is going to replace the SWIFT system, like the dollar itself, or be part of that infrastructure that replaces the SWIFT system, this XRP that's the tool, right, for the company Ripple to do frictionless transactions, in order for this to be able to handle hundreds of trillions of dollars every single day for the global economy, there's no way that it could be this cheap. It has to be way more expensive. There's a cap on how many XRP there is, just like with Bitcoin. So it is what it is, right? Like, this is just a fact. It's the truth, right? Like, this is how it's going to operate if it's going to do what they say it's going to do. What all these banks are saying it's going to do, the reason that they've got their partnership with 300 plus banks, okay, multiple countries, for that use case to be realized, it can't be $1. It can't be $4. It's got to be much, much larger than that, right? And there's a scarcity aspect, right? So at some point, there's not going to be any more made, so that in itself will appreciate price. And this is like the most heavily utility-based asset. It's not the most, but it's one of the most. It's one of the top. That's why it's so popular, because people know this. People have dug into this information. They see all the lies that have happened. They see that this community has been beat up because it's a competitor to the bank. So everyone's collateral damage. While the banks are loading up quietly, telling you not to invest, delisting it from platforms so they can position and then put you on the wrong side of the market, right? They got to shake people out because there's a limit on how much of these there are. So shaking people out makes sense, right? Because they want to get most of the share. You're going to have to do some dramatic things to get me out of this. I don't care if it comes down to here. I'll still be holding it. Now, if we go into negative, okay, whatever. We'll see what happens. That's not going to happen, though. And if it does, I'm willing to lose it, But again, I have not been proven wrong up to this point. All the people that talk about it haven't been proven wrong. We've been proven right multiple times over. This is all the manipulation that's happened, right? Lawsuit happened in here, dropped it all the way down again, allowed for people to get nice positions at the cheapest price ever, which I don't think it'll ever return to. We'll see. And now we've shot up again. So we'll see. We shall see. Go to this higher time frame here. What is that? 6-month chart. This just looks like a rally, retracement to a fair value gap. Oh, whoops. Okay. It's a 6-month fair value gap. So we'll see how things unfold around these levels, okay? These equal lows obviously got blown out. So let's see how deep they want to go. Nonetheless, we'll see what happens. Yeah, the next Fed chair is going to be spectacular. He's pro crypto. He's pro everything that we need him to be pro for. So you want smart people running the financial system. You don't want a bunch of idiot politicians that are forcing their political ideology into the financial world. The financial world doesn't care what type of politics you have. That should be totally separate. Keep that crap for the political world. Don't bring that into crypto. They tried to get it into everything: work, school, financial system, grocery stores, like the employees, right? Laws, like they tried to put their political ideas into all these things. It's like, dude, really? Like, not everything has to be political. Why are they making it political? Please. Like, I don't want to watch a football game and have to think about politics. But they've, over the years, forced us to have to do that. They've made you pick a side. And it's like, okay, well, go F yourself. Okay. Like, get the hell out of my brain unless I look for it. I don't want to hear about it. Right. So yeah, we talked about a lot today. Hopefully this crypto situation has been enlightening. I don't really talk about it a lot, but gave you guys some resources to go look into that I haven't really mentioned before. Talk about it all the time in my private group, but that group's, we got a lot going on over there, but hopefully it's helpful. Hopefully you guys look into it. Let me know how you feel about those resources. You won't regret it. Again, if you're new and you made it this far, I appreciate you. Hopefully you saw the value in these types of calls. Hopefully you got value. If you did, don't forget to like the video, subscribe to the channel. Appreciate you guys for sticking with me all this whole time. And yeah, with that being said, we'll be live again on Tuesday. We'll see what's going to be taking place. We'll be live around 6 a.m. We'll be live an hour before the open, or 30 minutes before the open. And I'll be active in the free group with markups, but I'll be active every day in my private group live on Zoom. Again, if you wanted to see what that's about, there's a QR code there and a link in the description. If you wanted to go with Tradeify, you got a discount code WMG, get the best discount. And if not, so be it. It's there for you guys to have that if you need it, because sometimes they're not running discount like promotions, but that code will always have one. Okay. So yeah, that being said, God bless you guys. Appreciate y'all for hopping on. Hopefully you got value. Don't forget to like the video, subscribe to the channel, and I will see you beautiful people again here on Tuesday at 6 a.m. All right. So have a good rest of your weekend, you guys. Take care.